What's going on, guys? I want to show you guys something here very quickly. A little bit of a training here, but what I want to show you guys is, why patients can tend to pay a lot more than just being so eager to take trades. One of the hardest things to do as a trader is to remain calm and remain patient. A lot of times, as soon as the market's open, we're watching these smaller time frames. We are really trying to trade every single move. You're trying to find something long, you're trying to find something short, you feel that the market is overextended, you're trying to call tops, trying to short when you shouldn't be. Realistically, if you would have just waited and kind of let things play out, you would have caught a fantastic move to the long side today. And I kind of want to get into two different scenarios where one, there would be an aggressive scalper, someone who is looking to kind of jump the move and get in a little bit earlier, and someone who is going to wait and be a little bit more patient. Now, obviously, both setups would have paid. It all depends on what your specific strategy is and what your current emotional level is when it comes to taking day trades. So what we're looking at here is a 1 hour time frame. We're looking at NQ, which is the NASDAQ 100 index futures. Now, everything that I'm going to be talking about here is going to be in Pacific Standard Time. I'm located in California, so all the times are going to be correlated in Pacific Standard Time. Just correlate them to whatever time zone you're in. If we kind of look at where the market is going to open up here on this candle here, we can see a little green indicator here at the bottom of this wick, and all this little indicator is doing is letting me know that we closed over the 20 SMA on a 1 hour time frame. That's all I kind of really need to know. So in this particular situation, I would be looking to take calls, or if I'm playing the triple Qs, or I'm playing something like Meta or Microsoft or Tesla, I'm not really looking to short if we're trading above the index's 20 period moving average on a 1 hour time frame. Now that that's out of the way, if you are trading futures, I want you to look at something here. If we kind of go back to the left here and we look at the pre-market highs or the after hours, or the overnight session highs here that we had on the NQ, we would see a price of 14,336. Now, an aggressive scalper is going to do what? They're going to let it break those after hours highs, okay, that early morning high, and they're going to go ahead and get long. Now, here's one thing that you need to kind of be aware of. If you are going to take this aggressive early entry, if you notice my chart's very congested, there's a lot of supply and a lot of demand zones running all through this chart. Now, what that tells you is that if you're going to get long here, you have to identify that you're taking a very aggressive entry, and you're either looking to scalp this very quickly, or you're looking to play very small size, so that if there is some sort of significant pullback, you're not going to get devastated and completely blown out of the water. So what we would be looking to do here is get in on the break of these after hours and pre-market high levels. And what we want to do here at 7 o'clock in the morning Pacific Standard Time, because this is the hour candle that starts to confirm this price action, we want to go ahead and get long, and we want to be taking profits into the next supply zone, which here on my chart is the 50 period moving average, and that price was sitting at around 14,353. So this aggressive entry here yielded about a 15 to 20 point run up that a day trader, a scalper, would have made great money on. And depending on if you're playing NQ or MNQ, and depending on what your position sizing is, this trade for 15 points could essentially be a one and done trade for the day if you're sized appropriately. But I want to kind of get into the fact here of, let's say, for example, your trader genetic makeup cannot kind of process price action this fast, especially off the bell, especially within the first 30 minutes to an hour off the bell. If you kind of notice this chart here, over this blue line, there's nothing but airspace, right? Look at the next kind of blue line that we have up here. Look at all of this area here is all just dark black. Notice that it's not congested like down here. What is that telling you? Now, based on the way that I trade in my strategy, some people may think that I've got too many indicators, too many moving averages on my charts. But one of the reasons why I've been trading like this for, well over 5-6 years now is due to the fact that I love to know exactly when we break a particular area or a particular zone, how far can we potentially run up? What is the next supply? What is the next demand? That's going to kind of allow me to sit in these trades, sit through a little bit of drawdown, understanding I've got support here, 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 here. And I can kind of see that, hey, if price action does break one of these specific levels, we potentially have a lot of room to run up. Okay. So if you would have stayed a little bit patient, and this is what, one of probably the hardest things to do in trading, because as soon as the market opens here, price action's up, it's down. You can see here we start to break down. Some people could start to short this level. There's realistically no confirmation on this candlestick low wick here. They would have immediately gotten trapped here. Someone could have gotten long here. You could have, been up 5-10 handles. It could have pulled back on you. You could have gotten stopped out. Lost a ton of money, come back at the end of the day and seeing that the futures were up, 100, 200 points on the day, and kind of sitting back, scratching your head, wondering why you didn't take part in any of these moves. Just because, for one thing, you're playing your emotions, you're playing your P&L, you're trying to jump the gun, you're trying to anticipate, you're trying to, kind of dictate pre-hand a little bit too prematurely where the market's going to go, versus just actually sitting on your hands and allowing the market to actually play out in real time. Now, if the market is going to open up here on this candlestick here, okay, we would have essentially had to wait about an hour to an hour and a half at 8 a.m. Pacific Standard Time for this price action to confirm. Now, this first setup here where an aggressive trader could have gotten in and taken some profits into this 50 SMA is completely fine. I've done these trades before, hundreds of times, but you have to already have the mindset going into this trade that this trade could backfire, it could pull back, I could get stopped out, and I need to, be ready to have my finger on the trigger to take those profits, because we are coming into a significant level of supply. And you'll notice here on this candlestick at 7 a.m. Pacific Standard Time that we did actually break this price action, this supply, and actually broke this next level of supply here as well, and then immediately retraced back to the level of support. So the smarter play, okay, is to kind of identify and understand that we are trapped here between a lot of supply and demand. If I just let my eyes tell me what to do, and I trust my technical analysis, the best potential trade would have been here. If price action confirmed short, we've got a lot of airspace down here to demand. I would be looking for this short position here. Okay, that's trade number one. If this confirms at around 7 a.m., I'd be looking to short this position, because we have nothing here to hang us up into the next level of demand. That did not happen. The next area that we would be looking at is here. Once we broke this 50 and we broke this linear regression channel, you can see that we've got nothing but open airspace. And if we kind of look to this 8 a.m. candle here, if you would have just entered in and stayed patient for the first hour to hour and a half, after the market opens, you could have essentially got into this move. And within a matter's times of 20, 30, 40, 50 minutes, you could have essentially rode the NASDAQ futures from a price of 14,385 to a price of 14,420. So we're talking about a 40, almost 50 point move in a matter of 30 minutes, 45 minutes here. And if you're playing, even if you're playing one contract at $25 a tick on the NQ futures, this would have been a one and done trade. You would have been very, very happy, maybe even taken tomorrow off. If you were playing 3, 4, 5 micro contracts, you still would have made a tremendous amount of money on a 30 to 40 point move. Essentially could have probably taken the rest of the day off, if not taken the week off after this. Now, let's say that you get into this trade, we do confirm, we do put in a run up. You can start to tell yourself, what are some of my kind of power trending moving averages? I've got a Bollinger Band here. I've also got the 5 SMA. You could do one of two things. You could tell yourself, and this is what it takes to be a great trader, you got to analyze this price action in real time. You got to make decisions in real time. What you could tell yourself is this: I'm already in the profit. I'm already in the green on this candle here. If we do lose any one of these two, now these are completely discretionary, up to you, depending on how much risk and profits that you want to give back. But you could tell yourself, if the next candlestick closes below my Bollinger Band, I'm going to stop out. If we do lose the next demand zone here, which is the rising 5 SMA, I'm going to stop out. Yes, I'm going to give back my profits. Yes, I'm going to go into a little bit of a drawdown. Yes, I did let a winning trade turn into a losing trade, but that's the name of the game. That's called trading. Guys, just because you are profitable never means that you're going to remain profitable if this next candle was to completely reverse. But having risk management and understanding that you do have a technical stop, which could be here or it could have been here, is how you stay in the game for the long term. Now, this candlestick never does take out these levels of demand, and actually, in fact, continues to push higher up to a price of around 14,462 from an entry price of 14,385. So we're talking about over 120 point move in a matter of an hour to an hour and a half time. Now, even simply trading one contract on the NQ futures would have netted you well over $2,000 per one contract. And the reason that so many people fail to, profit on trades like this is because, one, they're watching such small time frames. You're getting so much anxiety and fear and FOMO every time it's going up. You have 2 or 3 red candles on a 5-minute time frame going down. You stop out, you look back at the trade 30 minutes later, and it's still going in the direction where you were trading it. So zoom out a little bit, start using the 1 hour time frames. Even if you are a scalper, they're going to present fantastic opportunities for you to see the market on a much cleaner and clearer level, to where even if you do want to take a scalp, even if it is 10 ticks higher or 15 points or even 5 points, you'll have fantastic levels that you can actually play and profit on a day in and day out basis. But it is going to require a little bit of discipline. It is going to require a little bit of patience. This candlestick that opened up here off the market was down, it was up, very, very unclear. After the first 30 minutes of the market was open, we did put in a nice low here that, if confirmed, like I mentioned before, I would have taken this short position. However, I can't just simply start to short because we lost these pre-market levels. Because if I did, I could have gotten trapped. And if you did short the pre-market levels, you did get trapped. Now, how do you kind of prevent that? If you're watching a 1 hour time frame candle, it's just like watching a 2-minute or a 5-minute or a 15-minute. Just because this breaks an area, you need another candle to confirm that break, or we cannot take the trade. So the soonest that we could have taken this trade to the short would have been 7 a.m. Pacific Standard Time, and we would have needed to confirm this bottom low wick here, and that would have provided excellent value to the downside. That did not happen. If we did play, like I said, mentioned, an aggressive stance, taking the pre-market highs here, the only reason why this could be a thought factor is because we never confirmed this short position, and we actually started to reverse here. And as we started to reverse, we understand here at this 50 SMA, we have to 100% be taking profits into this zone. Now you may be thinking, well, if I would have taken profits here, I would have missed out on this candle, this candle, this candle, and this candle. You'd be 100% correct, but the play in the setup did not know, and we did not know, that this could potentially run. What we had to take into account is, this is our supply. This price could hit here and drop. This price could hit here and drop. So why are we going to take the chance in holding for this big move that we did not know happened, when we could just simply take some nice profits here and in fact here, and then look for the new trade, which would have come after 7 a.m. I hope you guys get a little bit better understanding of this technical analysis and the way that I'm using these charts on the 1 hour time frame to kind of get a good idea to find these levels on a day in and day out basis. If you do want to trade with me, make sure to join evolutiontraders.com. That's my website. Go over there. You're going to get all the access, and join the Discord that's down in the description box below. Hope you guys learned something from this. If you did, like, comment, subscribe. I'll see you guys all next time.